Hi, my name is Jason DeMartile. I'm a licensed insurance professional, and in this video, I'm going to break down the differences between term and whole life insurance. So stay tuned for more. Here we go. All right, so let's start with term insurance, and I'm over here. I'm going to give you the definition, okay? Textbook definition of term insurance. And so term, it's a straightforward approach to financial protection. When you think about term, it's for a specific period of time. It's typically ranging between 10 to 40 years. If the person dies within that designated term and the policy is active, that's the key word for all insurance policies, the beneficiary will receive the death benefit. Now let's talk a little bit about term. And so the type of people that really get term and qualify for term are younger people. So if you're between the ages of 18 and 60, and you have a mortgage payments or you have a family, term is where you should put your money, because if you get a $3 million, $4 million term policy while you're young, it's going to cost a lot less than trying to qualify when you're older, as the underwriting guidelines get really strict as you get older and health declines. So a term is good for younger families, and I have some great carriers that we can work with. We can do simplified term, which is a lot less stringent on the underwriting than a medical term, but I also do medical term as well, where it takes a little bit longer to get qualified. And so that's term. Now let's move on to whole life. All right, so whole life. They made it really simple with terms like term and whole. So whole means that it's going to cover you for the entirety of your life. So when you get the policy, the premiums will never increase. It's locked in until the day you die, as long as you pay your premium. So let's read a textbook definition of whole life coverage. It's known as permanent life insurance. It's the type of policy coverage for the insured person's entire lifetime. The premiums are fixed, and it also builds what's called cash value. So a portion of your premium payment will go towards building a cash value component within your policy. As it grows, a guaranteed rate can be accessed to the policyholder during their lifetime through loans or withdrawals. Now, there's a lot of different whole life policies and term policies. There's even one-year term policies. There's whole life policies people use as a bank with cash value that accumulates faster. Some people will overfund that policy so they can use it as a bank, called the infinite banking. And then they also have what's called like an index universal life policy. And we'll talk about that next. All right, so there's also what's called an IUL. Now, there's whole life policies that I said earlier. They're a simplified issue. They're pretty easy to get covered for. An index universal life policy, the underwriting's like a term, basically. It's harder to get qualified for, so as you get older, some people will use a surrogate, like maybe their wife that has better health, and they'll be the payer of the policy, right? Because some people use these in retirement. So when I say retirement, I shouldn't say retirement because it's not a retirement account. What it is people will use it for cash later in life. And I'm going to give you the definition here. So an index universal policy is a type of permanent life insurance policy that offers a death benefit and potential cash value accumulation based on the performance of a chosen stock market index. So you get to use those indexes. The insurance agent, always go with the S&P 500 if you're going to get one of these when you choose it, because it's time tested. There's a lot of them out there that they haven't been around long enough. So S&P. So IUL policies aim to combine the benefits of lifelong coverage with the opportunity for market length growth. That's pretty simple to understand, and it's a very simple concept. There's a lot of different strategies within these IULs, and I work with a team of professionals where we can get you connected and hooked up to understand all this. And so, these are the different kind of whole life policies that are out there. You have your simplified issue, where you're going to just do a final expense. Pretty easy to qualify for. Anyone can qualify for final expense. They have a guaranteed death benefit level that anyone gets covered. And then you have the infinite banking whole life policies, which include dividends, and you could fund those as well. And then you have your index universal life, which is the one that I just explained, that's linked, for market growth, and people use those for cash later in life. All right, so I hope this video has been super helpful on discovering what different kinds of policies are out there. Now, if you want to link up for an appointment, we can do a needs analysis appointment to see which one that you qualify for and the one that best fits your needs. Again, I'm Jason DeMartile. I'm a licensed insurance professional, and have an amazing day.